everyone, my name is Aisha Ochuwa and I want to run you through taxation in business. Now, taxation in business is simply the act of a government imposing compulsory financial obligations on businesses within its jurisdiction. Now, the monies collected from these businesses are used to fund government projects such as infrastructural developments, education, defense, social welfare programs, and healthcare activities. Nigeria operates a decentralized tax system where the different levels of government have a tax follow-up responsibility within their jurisdiction. Having said that, let's go to the different types of taxation in Nigeria. So the different types of taxes in Nigeria are, we have the personal income tax, we have the company income tax, we have the value added tax, we have withholding tax, we have petroleum profit tax, we have the capital gain tax, we have the stamp duty tax, we have the education tax, we have the tenement rates, and we have the National Information Technology Development Levy. Now, the personal income tax, just like the name implies, is a tax imposed on the income of persons. So this is a tax imposed on individual income of people in employment or self-employed by way of personal business or partnership. It is levied under the jurisdiction of the state inland revenue where the employment, the business or the partnership is resident or conducted. Now, for those in employment, they are usually taxed based on a payee scheme. Now, this payee scheme is defined as the pay-as-you-earn scheme. So, as they earn based on their salary, that's how they will be taxed. So, it's usually the higher you earn, you understand that kind of scheme. So, pay-as-you-earn scheme. The payee scheme is usually applied to those who are in employment. Now, for those who run their own businesses, for those who are self-employed, small businesses basically, they pay through a direct assessment process. This process is usually applied to small business owners. So that's basically what is applicable to the personal income tax. Now, unlike the personal income tax that is paid to the State Inland Revenue Service, the company income tax is paid to the Federal Inland Revenue Service. You see the difference? Company is paid to a higher authority. So the company income tax is paid to the Federal Inland Revenue Service. Now, all companies incorporated under the laws of Nigeria must pay the company income tax, except companies engaged in petroleum activities. Now, this tax is imposed on all profits incurring in, derived from, brought into, or received in Nigeria. Now, take note, a company that is resident in Nigeria is taxable on all worldwide activities under the Nigerian law. So as long as the company's headquarters is resident in Nigeria, as long as the company is resident in Nigeria, every worldwide activity, every business activity it does in any other country is taxable under the Nigerian law. Yes, I know you may be wondering why. That's because the company is resident in Nigeria. So a company that has its factory in Nigeria where it produces, let's say, bottles, and it exports to other countries, every of its worldwide activities will be taxed under the Nigerian law. But a company that is not resident in Nigeria will only be taxed on business activities conducted in Nigeria. For example, a company resident in, let's say, Ghana will only be taxed on business activities conducted in Nigeria. That's how it works. Please note that companies with an annual gross profit of 25 million and below, not more than 25 million, 25 million downwards, your company has an annual gross profit. You know what an annual gross profit is? The totality of your transactions, your profits you get. You have an annual gross profit the whole year of 25 million and below. Your company will be exempted from paying tax. Now, the fact that your company is exempted from paying tax does not mean that you would not file your company's income tax returns. You have to file your company's income tax returns, but you will be exempted from paying tax. You will not be taxed. Now, for companies with an annual gross profit of over 25 million, but less than 100 million, you'll be taxed at 20%. For companies with an annual gross profit that is above 100 million, you'll be taxed at 30%. Newly incorporated companies are expected to file their tax returns within 18 months from the date of incorporation and not later than 6 months after the accounting period. Now, for already existing companies, they ought to file their tax returns within 6 months after the end of an accounting year. So for newly incorporated companies, they ought to file within 18 months from the date of incorporation and not later than 6 months after the end of the accounting period. But for existing companies, for old companies, they have to file within 6 months from the end of the accounting year. Now, this brings me to the part a lot of people are probably eagerly waiting for. This is a question I get asked a lot of times. What are the tax exemptions? What are the company income tax exemptions? I mentioned 2 types of company income tax exemptions earlier, but I'll bring them to your notice in case you did not really figure out that that's what I was talking about. The very first one I mentioned was companies involved in petroleum activities. Companies involved in petroleum activities are exempted from paying the company income tax because they are taxed under the petroleum profit tax. So they pay the petroleum profit tax. Because of that, they do not pay the company income tax. The very second company income tax exemption is the companies that have an annual gross profit of 25 million and below. If you fall under this category, then you will not be paying the company income tax. The very third category is dividends, royalties, interest, and rents earned abroad and brought into Nigeria through government-approved channels. These type of incomes are exempted from paying the company income tax in Nigeria. The third type of taxation we'll be discussing is the value-added tax. A lot of people are familiar with this, especially business owners. Now, the value-added tax is a consumption tax that is levied on the sale of goods and services. Now, it is an indirect tax that is passed on to the purchaser. So, it's literally the purchaser that pays for the tax at the point of purchase. It is imposed on every stage of the purchase, from the purchase of raw materials down to production up to the final sale. That's when the tax is paid. So for the value added at every point, and even when there are middlemen involved, the value added at every point is taxed, and the final purchaser pays. A classic example is a jeweler who buys raw gold and refines it up to the point of different carats. So raw gold is bought in its entirety, in its raw form, and refined up to the point of, let's say, 10 carats, 14 carats, or 18 carats, for example. Now, the jeweler who refined it would add the VAT applicable for the value added at that stage. Then someone else goes on to buy it, or that same jeweler then turns that gold, let's say the 18 karat gold, into a necklace or a bracelet or a ring. So the raw gold has been refined into 18 karat gold. Value has been added at that point. VAT has been charged at that point. Then that refined gold is now made into a bracelet. Value will be added at that point for the conversion of that 18 karat gold into a bracelet. Now, another value added tax will be charged at the point of sale to the customer. So these are 3 stages of tax added. 3 stages of taxes added at each point. Now, the total calculation will be the value the customer will pay as the value added tax. The value added tax is charged at 7.5% and is payable monthly. So it has to be payable before the 21st of the following month. For example, You file your value added tax on the 21st of this month. Let's say we're in June and you file your value added tax on the 21st of June. You have to file the next one before the 21st of July. So it's a monthly payment. It's a monthly payment and it is filed at the correspondence tax office of the taxpayer. The fourth type of tax we'll be discussing is the withholding tax. This is also an income tax, but in this case, it is paid by the payer of the income as opposed to the receiver of the income. And the purpose of this is so the government gets the tax payment at the earliest time and to prevent the receiver from avoiding tax obligations. That's why the payer of the tax pays, the payer of the income pays it as opposed to the receiver. So before the money even gets to the receiver, the tax will have been deducted and paid to the government. Now, this is usually taxed on contract-based transactions. For example, rent and other contract-based transactions, and it's usually charged between 5 to 10%, depending on the type of transaction. The fifth type of tax we'll be talking about now is the petroleum profit tax. Now, the petroleum profit tax is applicable to companies involved in upstream petroleum activities. Companies who are subject to this taxation do not pay the company income tax. We discussed this earlier, and this is backed up under the Petroleum Profit Tax Act. This tax is to be charged on the profits of each accounting period of the company and shall be taken to be the aggregate of adjusted profits, assessable profits, and chargeable profits. It is taxed at a rate of 50% for petroleum operations under the petroleum sharing contract with the NNPC. That's the Nigerian National Petroleum Corporation. Now, for non-petroleum sharing contract operations, including joint ventures, remember what we discussed about joint ventures. It is important to know that it is taxed at a rate of 65.75% in the first 5 years, one in which the company has not fully, amortized its pre-production capitalized expenditure. So after the first 5 years going forward, it will be taxed at a rate of 85%. The next type of tax we'll be talking about is the capital gains tax. Now, this capital gains tax is governed by the Capital Gains Tax Act, and it is applicable to chargeable assets, like the sale and the exchange of chargeable assets. An example is if there is a visible difference in the sale of a house, for instance, because of an appreciation in the land. For example, if a house was bought in, let's say, Lekki, for instance, and it was bought at the rate of 50 million naira. And because of an appreciation in the value of the land over the years, it is then sold at 95 million naira. Now, take note, there is a visible difference of 45 million naira. Capital gains tax will be charged on the profit, meaning it will be charged on the 45 million naira gain, and it will be charged at 10%. That is what capital gains tax is about. It is a tax applicable to the visible difference in the sale of an asset. It's chargeable on an asset and is applicable to the visible difference. When there is a visible difference, capital gains, the gain on the capital, that's what is taxed. Now, the next type of tax we'll be focusing on is the stamp duty. I'm sure a lot of you are familiar with the word stamp duty. You probably use it without truly understanding what it is. This is the type of tax that is applied to legal instruments. It's applied to documents such as debenture, proxy forms, guarantor forms, deed of assignment, share capital, bills of exchange, checks, receipts, agreements, military commissions, electronic transfers, and even documents for the acquisition of lands or buildings. Companies pay tax duties to the Federal Inland Revenue Service, whereas individuals pay stamp duty to their respective state governments. The amount of stamp duty to be paid is usually determined by a commissioner of stamp duties, and it is governed by the Stamp Duties Act. That's basically what it's about. It's a type of tax paid on legal instruments, mostly documents, whether via electronic transfer or written. It is governed by the Stamp Duties Act. It is determined by a commissioner of stamp duties. So when they weigh the type of legal documents you want to pay for, they tell you the applicable stamp duty. And companies pay to the Federal Inland Revenue Service, while individuals pay to their respective state governments. That's basically the A to Z of stamp duties. Those are the primary things you need to know. Who determines it, who it is paid to, the law that governs it, and that's what I have told you. The very next taxation, one I really love, one that is mostly overlooked, less attention paid to it by people, is the education tax. Now, this taxation was introduced into Nigeria to involve the private sector in building a stronger educational system in Nigeria, because the private sector are direct beneficiaries of the product of education. However you look at it, people being employed into these different organizations got an education, probably in Nigeria. So we should pay more attention to this taxation because we are direct beneficiaries. It's charged at 2%, and it is used to sponsor educational activities in the country, building of schools, training of staffs, provision of educational materials to build a stronger educational system in Nigeria. That's why it's charged at just 2%, involving the private sector in the building of a stronger educational system. Education is important. We should pay more attention to education. Left to me, I feel this level of tax should be increased, but let's leave it at the 2% is operating at. And my advice is, engage more in it. Pay your educational tax. Pay it. Pay up. Involve yourself in building a stronger educational system, and together we will enjoy the benefits of it, because we'll have more educated people who are more employable and more maintainable in our company. The next one is the tenement rates. Tenement rates, landlords and tenants. I mean, most of us are familiar with this. So these are basically taxes paid by landlords and tenants to the, local government council. And these local government councils use the money gotten from these tenement rates as part of their, internally generated revenue for local infrastructure and public services, just activities within their jurisdiction. That's why it's important for us to pay up our tenement rates, so we help them raise money to serve us better. So the very last type of tax we'll be talking about now is the National Information Technology Development Levy. Now, this tax was introduced into Nigeria to help support the development of the information technology sector in Nigeria. It is governed by the National Information Technology Development Agency Act, and is implemented at a rate of 1% before profit. So this is implemented at 1% before profit for companies with an annual turnover of 100 million and above. So this tax is applicable to companies with an annual turnover of 100 million and above. So companies that have an annual turnover of less than 100 million do not pay this tax of 1%. Remember, it is charged at 1% before profit. So every income that comes into the company, the government takes 1% of it for this taxation. It's charged at 1% before profit, and it's only applicable to companies with an annual gross profit of 100 million and above. So if your company does not generate up to 100 million, this type of taxation has nothing to do with you. It has absolutely nothing to do with you. So I'm sure when you heard about it, you're like, which one is this one again? Don't worry. If your company, I hope it has something to do with you. That means your company is doing very well. But if your company does not get up to a gross profit of 100 million and above annually, then you wouldn't have to pay this tax. This tax is filed alongside the company's income tax. So for companies, remember the company's income tax is charged at a rate of 30% for companies with an annual gross profit of 100 million and above. So when those companies are filing their company's income tax, they will file this tax alongside for assessment. Failure to file this tax within 30 days of demand notice would attract a penalty of 1, the unpaid amount. This means you are still going to pay that unpaid amount that you are avoiding. Number 2, plus 10% extra of the unpaid amount. So after paying the unpaid amount, you'll still pay 10% extra as part of your punishment. Thirdly, you will pay an interest of the prevailing minimum discount rate of the central bank. Wisdom is profitable to direct. I would advise you to file. While you are filing your company's income tax, make sure you file this tax also to avoid all of these payments, because now in this case, if you are found wanting, you will pay the normal tax, pay an extra 10% and still pay. You don't want to do all of that, so just pay it at once to avoid getting in trouble with the law. I know when I mentioned that companies with an annual gross profit of 100 million and above, you were scared. You're like, wow, so I sell hairs. If I have an annual gross profit of 100 million and above, does that mean I'm going to pay this tax? Don't worry, relax. There are companies who this tax applies to, and these companies are: number 1, internet providers; number 2, banks and other financial institutions; number 3, insurance companies; number 4, pension managers and pension-related companies; number 5, GSM service providers and telecommunication companies. So don't be too scared. If your company starts to make a lot of profit and you shoot up to 200 million, once you do not fall under this category, you wouldn't need to pay this tax. These are the companies that this tax applies to. So that's it about the different types of taxes that we pay in Nigeria. Study them, listen again, make sure you're familiar with the different types of taxes so you don't get in trouble with the tax authorities. I promise you that's not one type of trouble you want to get into. It's not sweet. You will not enjoy it. So just avoid it. The best thing is to avoid it. Now, having said all of that, let's quickly run through the different tax authorities in Nigeria. Remember, we earlier mentioned that Nigeria operates a decentralized tax system. Federal Board of Inland Revenue, State Inland Revenue Board, Local Government Revenue Authorities. So these are your tax authorities, and the different ones apply to the different types of taxes we mentioned. Remember when we mentioned most of the taxes, we also mentioned the applicable tax authorities. So study them and know that these are the tax authorities that are applicable in Nigeria because of the decentralized tax system we operate. Please pay up your taxes. It is important to pay your taxes. Payment of taxes will help, number 1, in the educational system, especially for the educational tax. Please participate in it. This will help us train our students, train our young people. They need to go to school. Education is important. Payment of educational tax will help them go to school. We'll put as many people as possible in school. And the more educated people we have in Nigeria, the better companies we'll have, because we'll have more equipped people who will help us run our businesses. It is a win-win however you look at it. Participate, pay your tax. These taxes are used for infrastructural developments, building of schools, building of hospitals, construction of roads, the funding of social welfare programs. However you look at it, we are direct beneficiaries. So it is important to pay your taxes. It is important to support the government. This way, we'll build the Nigeria of our dreams, the Nigeria we have always wanted. Pay your taxes. The importance can never be overemphasized. Pay your taxes. It is important. Do not avoid tax payments. Make sure you pay your taxes. And together, we will build the Nigeria of our dreams.
Aisha Ochuwa.